Well, let's go ahead and open up our trade here on a Monday morning and invite in a little expert guidance as we open up our trade. We have Dewey Strickler on the line with AgWatch Market Advisors in Franklin, Kentucky. Dewey, let's dive into these prices here. I want to get your thoughts on what we see happening on the corn market right now in Chicago. Here's our first look. Right now, we have September a penny and a half higher at 371 1/4. Well, when I came into work, the trade was basically just a fraction higher, so we have added to that a little bit. December corn now a penny and a quarter higher at 385 1/4. Let's look at our soybean trade. This is the one that was roughly a dime lower overnight, and it's opening that way. We have September soybeans now down 10.5 cents. We're at 8.81 per bushel. That's still 11.5 cents off of our overnight high. And in November, we're trading 10.5 lower at 8.91 3/4. Moving on to our wheat trade. How are we opening up there? Well, as we take a look at Chicago, first of all, they're adding a little bit of coal to the fire here, as it were. We have September Chicago wheat 14 higher now at 570 1/4, and December now up 12 3/4 at 592 1/2. I believe it opened about maybe 7 higher or so. Now, if we look at Kansas City wheat, we have September trading 13 higher now at 580 1/4. Well off of its overnight low of 563 1/2, so we have come off of that by about 17 cents. Let's take a look at Minneapolis wheat. What's going on there? Well, we have September 10 3/4 higher at 623 1/2. Cotton market right now is opening up on that December contract about 32 points higher at 88.44 cents per pound when it had been lower overnight. So a little firmer tone here led by the wheat market, Dewey, this morning as we open up our trade on a Monday. Does that surprise you at all?
Well, not really. When I look at the market, technically look at the patterns here, Marlon, it looks like that we will likely see maybe those old highs be pushed aside here by just a marginal amount. But I will say this, we are running on fumes right now.
So what is the trade going to do as we get closer and closer to our crop production report that comes up on Friday? That'll be out at noon Eastern time on Friday. Do you think this grain market may flatten out ahead of that or not?
Well, you know, when you look at Friday's report, that is going to have the first field surveys. You generally see more volatility leading up to that. I think, if anything, with the soybeans sinking here, we might see a little strength come in. And if we can see the corn market get up past resistance, I believe we'll see a little selling come there. Like I said, wheat is running on fumes. I think we'll see a new high, and then after that, we're going to see a pretty sharp setback.
Have farmers been taking advantage of this rally that we have seen in the wheat trade since harvest here?
You got a lot of interest in it, yes. You got some guys that are even looking at this July 2019 contract.
What do you think the odds are we're going to see increased acres then this fall?
Well, I think, you know, if you got wheat back up here near the $6 mark, there will be some increase in acres.
Okay, Dewey, we'll come back in a moment and we'll open up our livestock trade and take our first looks at our new trades for this week. We're talking with Dewey Strickler. Don't go anywhere. We'll be back right after this. Let's take a look at what's going on in the value of the U.S. dollar this morning. We noticed it had jumped a little bit here overnight. Well, right now on the dollar futures, we are indeed 320 points higher on the September futures contract. It's now up above 95 cents at 95.280 on the dollar index. Crude oil trade will watch that too. And September now trading 56 cents higher at $69.05 per barrel on West Texas Intermediate crude. That's interesting. Let's take a look at our cattle market and see how we're opening up today. Right now, you have your August live cattle trade about 32 cents weaker. Remember, we closed almost all the livestock trade much higher on Friday as we headed into the weekend. No follow-through apparently this morning, so August at 110.35, down 32. This is in delivery now on this August contract today. October live cattle down 62 at 111.38 per hundred, and December down 40 cents at 115.10. On the feeder cattle trade, we'll take a look at August, which is down 73 at 152.12 per hundred. We have September almost identical. It's at 152.15. That's down 88 cents. October down 75. On the lean hog trade today, this one had some big gains over $1 all across the board on Friday, except for the nearby contract, which went lower all by itself. On the lean hog trade right now, we have October 77 higher. So here we are seeing follow through to the upside. 51.55 is the last trade. And December now up 60 at 46.78. So Dewey, your thoughts here? Cattle a little bit weaker to start things out. The hogs a little bit higher today.
Yeah, that's right. You know, as I've said here past few weeks here in the cattle market, we are edging higher here, setting higher highs and higher lows. But this thing really looks sloppy. We may get this October up into the 113.50 area, another couple of hundred points, but I'm going to look for a pretty hard hit in the cattle market here later.
We did hit the 113 to 114 level in the cash market very late on Friday. Do you think that's going to be kind of resistance now at that level then, apparently?
I think it very well. We do have that discount there. I think that will narrow. So in other words, futures may edge on up and cash just hold steady to maybe pull back a little bit.
With the hog trade a little bit higher today, have they dug in their heels? And do you think they're going to defend that low that was posted here a couple of days ago?
They're definitely digging in their heels, but I will say this. The market doesn't quite look like we've put in a bottom here yet. I'm not convinced that we've got a low in the hogs just yet.
All right. Well, Dewey, thanks for weighing in on the markets for us this morning. I appreciate the help as always. Dewey Strickler happens to be with AgWatch Market Advisors. He is located in Franklin, Kentucky on the southern border between Kentucky and Tennessee.